Alright, but welcome to the introduction for the Inception model. Hope you're doing well watching this video. Over the course of this series, we're simply just going to be dissecting the Inception model from A to Z. So jumping straight in, what is the Inception model? Now, Inception is the beginning of a new phase of delivery. Inception will always be a reversal on the current state of order flow, and Inception is arrived through the blending of time and price. Now, a little footnote on the bottom right corner being Inception into terminus, terminus into Inception. Now, terminus is the end of a phase of delivery. And where we find terminus, we are also going to find inception. And where we find inception, we are also going to find terminus. Now, the objective of the model is to align entries with higher time frame institutional order flow, capture the smart money reversals of American maker models, as well as frame higher time frame power of threes. And by doing so, it allows us to identify the high and low of time-based ranges, being high of the week, low of the week, high of the day, low of the day, as well as high of the session and low of the session. Now, by aligning entries with higher time frame institutional order flow, it invites for smooth delivery runs towards those higher time frame objectives, and it offers a base level of confidence to the trader with the knowledge that, okay, the idea is framed from a higher time frame, and the lower time frames will follow suit when the time is right due to the hierarchy of time frames. And then capturing a smart money reversal of a American maker model, it allows us to gauge order flow using the previous American maker model. In order for a American maker model to start, a American maker model has to end, and this simply just brings us back to that inception, terminus, terminus, inception. And then framing a higher time frame power of three includes an element of time. Now, with the knowledge that inception identifies the high and low of these time-based ranges, this limits the amount of trades that can be taken over the course of a week, day, and session with sound logic. And I will break that down in just a bit. But the components of the Inception model being time, the PD array matrix, American maker models, ranges, delivery phases, inter-asset relationships, Fibonacci tool, and narrative. These are the components of the Inception model, and this is what we are going to be taking a deeper look at in separate videos. And once an understanding is arrived upon in relation to all of these components, then the Inception model is at one's disposal. Now, the expectancy of the model. So the Inception model is a discretionary based model. Now, it being a discretionary based model means that the stats may vary per trader due to one trader's personal risk management, their psychological standpoint, discretion, experience, and protocol. But the average win rate is 70 to 80%. The average risk to reward coming in at 4 to 5 risk to reward, as well as the minimum yield in relation to risk to reward is minimum 3, and the max yield, there is no number on it because with the model, we're always locating ourselves at a point of inception, which is going to be a reversal. At inception, there is always going to be an invalidation point in relation to when the idea is no longer valid. If from a point of entry and invalidation, the stop loss size is only 10 points, and then terminus is ultimately 250 points, that is going to be the risk to reward. The risk to reward is very dependent on whatever the structure looks like on that given day. But you can expect a minimum yield of 3 risk to reward on any given day from a point of inception and terminus. And then the average winning trade duration would be 15 to 90 minutes. Average losing trade duration would be 1 to 10 minutes. And then the average model frequency per week is 2 to 6. Average model frequency per day is 1 to 2. Now that's average. Average model frequency per day can well and truly just be 0. Now, with that being said, in one day there are 10 potential trades. It would be your high of day, low of day, being 2 of them. And then you have high of the session, low of the session being 8, because we're accounting for the sessions that take up a majority of the daily candle, being Asia, London, New York AM, as well as New York PM. Now, just because there are 10 potential trades does not mean that all 10 should be attempted to be taken. The objective of the model is to align ourselves with higher time frame institutional order flow, as these will offer the highest probability setups, as well as the fact that, for one, not every high of day, low of day, high of session, low of session is going to offer the Inception model. Some days may not offer one at all. And two, being that not every day is a trading day, meaning that just because the candles are printing on any given day does not mean that the market should be engaged with, because the truth of the matter is less is more. But if one was to try and secure 7 of the 10 potential trades during the course of a day, this just opens the individual to more risk by engaging with the markets with a higher trade frequency. And this is going to impact the statistics of the model severely, as well as the fact that this opens up room for the trader to suffer cognitive and emotional fatigue. So with cognitive fatigue, technicals become impaired, and with emotional fatigue, it impacts one's actions. But I'm not going to dive too deep, because we would then be entering the realm of the psychological aspects of trading, and all of the sorts will be covered at a later point in time after the Inception model has been fully released. But how do we avoid this from a technical standpoint derived from sound logic? And the way we do this is by framing a higher time frame power of 3. By framing higher time frame power of 3s, it leaves less room for more trades. If one is trying to frame a daily power of 3, it's predetermined that there will only be 2 valid trades for the high of the daily candle and the low of the daily candle. Now, a little footnote on the bottom right being elements of the Inception model can be approached from a mechanical standpoint, and I will expand on that when such elements are arrived on. Next, we're looking at what does the model require of an individual. Now, we have universal requirements and tailored requirements. Tailored requirements are tailored to the Inception model. Universal, it doesn't matter what model it is. These are prerequisite requirements, one would say, being confidence, conviction, the ability to do nothing, risk management, accountability, decisiveness, objectivity, composure, discipline, and patience. These are all universal requirements of an individual. And to be quite honest, you can expand on that list a lot more. But in relation to the tailored requirements for the Inception model, the ability to gauge order flow, respect for time over price, price action conditional awareness, narrative and understanding, pattern recognition, fractal awareness, selectiveness, adaptability, precision, and timing. These would be the tailored requirements for the Inception model. Now, something under the likes of price action conditional awareness, I will expand on. Narrative, of course, will be expanded on. Fractal awareness as well will be expanded on. To be quite honest, everything under the tailored requirements will be expanded on. And lastly, foundational questions. Is the model restricted to one time frame? The model is not restricted to one time frame. The model is fractal, meaning that the same structure, framework, and requirements that I need on the 1 minute time frame is the exact same I would need on the 1 hour time frame. So the only difference is the amount of time it's going to take for the setup to form as well as deliver. But the model is not restricted to just one time frame. Is the model restricted to one market? The model, once again, is not restricted to just one market and works across all assets. However, the stats may vary across different markets, such as the trade frequency or the trade durations. Now, I have personally collected data with the model on NASDAQ, gold, Euro USD, crude oil, and Ethereum. And the next question being, what concepts is the model built on? So the model is built on ICT concepts. So being somewhat familiar with ICT concepts is, of course, going to serve as advantageous. But What level of experience is needed to trade the model? When it comes to experience, there are two types of experience. There is technical experience and then there is psychological experience. Now, in relation to technical experience, this can be fast-tracked, and this is fast-tracked through the process of collecting pseudo experience, which I will expand on in later parts on how to effectively do so as well as see its effectiveness, or efficiently do so as well as see its effectiveness. But then there is the psychological experience, and this cannot be fast tracked. And a minimum of 3 months worth of consistent journaling and engagement with the markets builds a foundation for psychological experience. And that foundation is simply just in order to recognize one's personal habits, patterns, and flaws that they exhibit while engaging with these markets. 3 months being the minimum doesn't mean that consistency arrives at that 3 month mark, but it also doesn't mean that it's impossible for it to arrive at that 3 month mark. It's all dependent on the individual and their emotional maturity, as well as their psychological approach to trading. In trading, technicals take up 20 to 30%, and the rest is attributed to psyche. Now, I guess one can argue and say that this is why the failure rate in relation to trading is so high. It's not the actual skill that's difficult when it comes to trading in terms of clicking the button. It's the psychological part of trading in terms of overcoming oneself, because trading forces one to go through a route of introspection, looking in the mirror, which is something a lot of people are not comfortable doing. But to be quite honest, I'm going on a little tangent here and I'm not going to, turn a little philosophical. But in regards to the level of experience, if one is already familiar with ICT concepts and has journaled and engaged with the markets consistently for a minimum of 3 months, then 1 to 2 months worth of data collecting pseudo experience is more than sufficient enough. On the other hand, if one is not familiar with ICT concepts, it's fine. But if there has not been a minimum of 3 months worth of consistent journaling and market engagement, even though technical experience can be fast-tracked, psychological experience cannot. So a minimum of 3 months is required. And then the next question being, how long until the model should be put into practice? Now, to be quite honest, I've already answered this question with the question above it. In terms of this question is really dependent on one's experience, as well as the fact that this isn't even a question that I am able to answer for another individual, because the individual will know when they feel ready. And then lastly, who is this model for? Contrarians. That's as simply as it can be put. The model is designed to always go against whatever the current state of order flow is at that current point in time, which means that it's going to require one to confidently buy when all price has been doing is selling off, vice versa. So anyone who can look at a general crowd and say that, no, you guys are wrong, because if you're not viewing the markets from an algorithmic perspective, or you're not engaging with the markets with the preconceived notion that these markets run on an algorithm, you are essentially believing that as price is delivering down very heavily, everyone and anyone is selling. That is essentially what you are viewing it as. So it's going to require for you to stare at everyone else and say, you know what? No, you're wrong. It's going to go up here. But yes, that is it in relation to the introduction for the Inception model. Thank you for watching the video, and I'll see you in the next one.